Hi, this is Randy Finney with the Right Side of the Chart, and this is a mid-session update for Wednesday, September 11th, 2019. Just want a quick follow-up to the other video. A couple more things I'll add, but most of it's just a recap on what I covered earlier. So my targets have been hit, and I have reversed. Closed the longs on NQ, took a starter short, and actually added to that one. Still plenty of room to add right now. Nothing too heavy today, but let me show you the levels I'm watching. So remember, this is the top of that trading range that was targeting today, and suspected a little pop above it. Now I had the line at what, 78.83 on this chart. I have another chart where it's a little higher as well. Another charting service. It runs. You can see. Look closely. Hard to see on this chart here, but there's a few spikes above it. Either way, there's that trend line I had at the top of it right there. I just extended it out. And so what that does, it just extends the divergences. As I said, you either need to make equal or higher highs in price with your indicators making lower highs, referring to the previous peak. So here's your divergence lines right here. So it's good enough to give us what we need, although there's still plenty of room if it wants to punch up a little more. But let's take a look at the 1-minute charts. I'll show you why, among other reasons, why I decided to go ahead and reverse long to short there. So that's NQ. Let's look at ES before I get off the futures. ES, there's a nice clean divergent high. Let me zoom in a little bit and show you these candles a little clearer here. Zoom, 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 zoom. There we go. Nice clean divergent high. There's where I had the line before, just kind of forecasting where we might go. Let me pull it down. Actually, it comes in perfect right there. So, market doesn't always like to give us perfect, but it's close enough, and I'll have to take it on face value. So here's an uptrend line to watch right now on ES, if you're an ES trader. And of course, even if you trade NQ, you want to keep an eye on trend lines like this, because if, let's say, NQ looks like it breaks a level, and then at the same time or shortly afterwards ES falls and hits that trend line and then bounces, well, NQ is probably going to reverse, because they have a lot of the same components in there. So that's it. There's your wedge. Let's keep it plain and simple. Wedge type pattern, 60-minute charts, everything I talked about earlier today. You should see the same things in QQQ and SPY. Let's look at that. We'll get to these 1-minute charts in a second. IWM 60-minute chart. There it is, right there, that 156.53 level. Look at that. Clocked it cold, hit that level. A little brief momentum fueled overshoot and reverse so far through it. So this is more of a price channel right now, right here. And so we're at the top of the price channel at resistance. And as I mentioned earlier, if you didn't catch that video, I said if we did that, we're going to pop above here just like we did back then. So this it's a breakout if you want to take it on face value. That's the part of trading that I like to look at, where some traders are mechanical. Take a breakout, yeah, because it's a breakout, and I'll look at it and assess the charts, and do I think the breakout's going to fail? There was a failed breakout, meaning intraday you went up and then you closed back down on or below the trend line. So that's what I suspect will happen here. Let's get to the charts and I'll show you why. All right, so let's go down to the 1-minute charts, or no, let's look at the 60 minutes of QQQ and SPY. I already showed you IWM there. And there's QQQ. There's your nice little wedge. There's your divergent high. You can now take away the question marks, because it has happened. So there's divergent high, and again, when you're wedging, you can continue to work your way up within the wedge. Anything could happen. You can burn through it. You can burn through the divergences, but that's possible. The key is watch for a break below the wedge, because now you have a bearish rising wedge, 60-minute chart, divergent high, and if history repeats, there's a wedge right here. There's your wedge. Here's your breakdown there. That came during an uptrend, when the market was still working its way to new highs. And then since we were in the trading range here, you had these little bit bigger drops. We'll see what happens. I just want to point out the divergences are in place, and we don't have really sell signals per se. We have divergences, but not sell signals. Again, sell signal will come on a break below the trend lines, and you want to see both SPY, QQQ, ES. The more indexes you see break, and if you can confirm it with the futures and the ETFs, all the better. Puts the odds in your favor, and helps minimize the chances of a whipsaw signal or false breakdown. So there it is, divergent high. Still have support here around 296.61. And if this wedge breaks, as I told you, I'd expect a minimum of a move back down to that 294 level on SPY, which was the top of the August trading range. And if it works its way higher, like I said, we're in spitting distance of the all-time highs right there, and so there's plenty of room right now to work our way higher within the wedge. Like I show you, I'm moving these divergence lines up and still keep the divergence intact. So like I said, without any sell signals, it's hard to say if this was a top just because it was a divergent high, if that makes sense. So it could look something like that, can pop the new highs, all-time highs, which I said you get close enough, you get buyers that step in, get excited for it, and usually, just for whatever reason, they usually pop it once you get that close. And maybe it's also a stop popping thing, with the powers that be, market makers, the algos, maybe they want to pop stops to get all the clear out stops on the shorts before they themselves use all that buying that it generates when the stops are hit, generates buying pressure as short trades are covered, buy to cover orders, and then they turn around on the other side of the trade as you're getting squeezed out of your shorts. They're going short into the strength there, and then boom, that's why you get those. That's what a stop raid's all about. Okay, let's look at the 1 minute charts. I posted these in the trading room. I posted first SPY and QQQ, then I followed up with IWM. I'll get to that in a second. When I originally posted them, I had a wedge like this, a rising wedge in SPY, and also a rising wedge in QQQ, and I had these 1, 2, 3, 4 potential target support levels, preferring for a day trade. I shared it as a day trading op, and I said with the IWM trade, you could also, especially with IWM, enter it as a potential swing trade when you get the sell signal, and I'll get to that one in a second. I followed up with this trend line here because I noticed that when SPY broke down, what it did, it's not a failed breakdown because we didn't get back above the trend line. We simply extended the divergence that was already in place right here. So there was my first divergence line. We extended to this high, and we started to move lower, and we broke this trend line. You can see we back tested it for a while. After the back test failed, a little impulsive leg down. I mean, this is a little micro world. If you're day trading, the thing is you leverage up. Whether you're trading SPY, you have a margin account, you trade many times what you might normally for a swing trade because you don't have any overnight risk and because you're going for relatively small gains. In other words, if SPY drops down, even from where it is right now, to let's say it hits this target down here, that's a 3.32%, about 1/3 of a percent. Puts a pretty penny in your pocket if you're leveraged up on day trading, but it cuts both ways too. If you have to, if you're shooting for 0.3%, there's their 3-to-1 RR right there where I'm holding the line at the crosshairs. If you shorted, again, just assuming you shorted right here, 292.82 would give you a 0.11% stop loss. That gives you a 3-to-1 risk reward ratio going down to that target there. And then you also, of course, if you were day trading, that's why these lines are there. They're support lines. This level has not been broken yet. So SPY is holding up relatively well. And the way it works is if that level goes, it opens the door to the next one. If that level goes, that opens the door to the next one, and so forth and so on. So there's SPY. QQQ, pretty straightforward. There was a wedge, there was a breakdown. These are the 4 levels that I gave you listed as the potential targets, and they still are. SPY went on to make a marginal new high at that almost an equal high, and it simply extended the divergence a lot like SPY. So QQQ went to there. There's your, no, it would be at this point right there. There's your divergence line. And then you can see here is that first support / target level. Broke it, and we had an impulsive move down. See, it's not very big. There's not a lot of action going on in the market today, but that was the most impulsive 1 minute candle we've had all day, at least to the downside, and it was because we broke down. Then you came in. This is TA 101, so you could have shorted the breakdown. If you missed it, you short the back test of kickback to support. Once broken, then becomes resistance. Same here, broke down. We kicked back, but we've taken back this level. So what you want to watch at this point is just put a downtrend line. That downtrend line's been taken out, so who knows? Maybe that's all this one has. Again, it all depends on that 60-minute chart. Are we going to wedge higher or not? As of now, if you shorted the breakdown right here, that's where it was posted, then you can put a stop at entry, and that QQQ could kick back all the way back here, another quarter point or so, and you'd be stopped out of break even, or you can lower your stops along the way. Ideally, I want to see it stay above this level now. And this is micro stuff. I usually don't cover day trade stuff on the front page, but it's kind of where things might go today. Now, here's the IWM. As I mentioned, IWM at trend line or just above trend line resistance right now. So here's the wedge I posted. Let me move this one away. So I posted this wedge on IWM, and we had what I call a wedge overshoot. You had a wedge right here. We popped above it briefly, but it kept the divergences intact. Now, you could really put this trend line here and just say that now you're working your way up within this price channel here. I'll color it blue. So we're working our way up within the price channel. Either way, IWM has not triggered a sell signal yet. It has to break below this trend line right there to trigger a sell signal. And so if that does, it could have cascading effect. It could take us down. I would say this is my preferred swing trade. If we're going to dump into the close today, there's only an hour and 15 minutes to go. But if we did, that would be my max day trade target right there, about 154.87. I think that had a good chance of getting hit, and maybe tomorrow if we gap down, if the breakout fails, that would be the next target. That might require going home overnight, and so therefore if you day trade and it morphs into a swing position, that's what I'll do sometimes, take an oversized position in a day trade. But if the longer term charts confirm, like I said, if IWM does this, it will have failed that breakout on the daily chart, and if so, that opens the door for maybe a much larger move down. So then what I do is before the closing bell, or if I'm in futures, before some point I'll lower my either reduce my position size or tighten up stops. Again, with futures you have almost around the clock trading. They shut down a little each day after the market closes, but then they open back up. So either way, levels to watch. And then what else did I want to show you? Here's another chart I posted in the trading room, is palladium. I mentioned that should the markets, we've already seen a reversal where I was expecting it in NQ today in the QQQs, and that to me is the most important index. Should that continue to play out for more downside, then we should see a lift in my the precious metals I shared as trade setups earlier. This one's gold, GC. Still, see, it's not taking off because the markets, although they've broken those 1 minute charts, they really haven't moved impulsively lower yet. They're still up. They're still positive by a healthy clip today. SPY, as I'm doing this, is up 0.44, and QQQ, whatever it is, it's probably twice that or close to it. So again, gold's kind of in a holding pattern. If this breakout's going to play out, it will certainly help if the markets go down. It's possible that the markets can hold up and gold starts to rally, because remember, I've said this before, they're usually inverse, that risk on, risk off trade thing, but there have been periods lately where, especially back here, where the stock market and gold was rising, so that could happen again. Either way, I like this technical. So, like I said, I'm long gold, silver, and platinum. There's gold, and I'll add, of course, if these firm up, with what I've just talked about, with the stock market starting to move lower impulsively, go down, break some of those trend lines like I showed you, maybe that one on IWM. Here's platinum, PL, and I think I said it on the front page this morning. If you don't trade futures, there's ETFs for all of these. You can reconcile the same levels on your chart. Well, not all the same levels, because futures trade around the clock, but there's PALL. Oh, you know what I missed? This line should be right here. See, there's a candle. I had it blocked right there. So you have platinum at palladium, I'm sorry, at downtrend line resistance. And so what I'm doing here is making a case for a potential short trade on palladium, which would also help hedge. This is one of the big four precious metals: platinum, palladium, gold, and silver. And I've just mentioned, I like the technicals on gold, silver. I like the fact that if the market corrects, you get this risk-off trade will at least briefly come back into play here. So there's gold. Covered that. No, that's not the one I want to show you. Platinum, I covered that. Kind of waiting for the market to roll over, and then these guys should rip. Let me give you the levels here. You can see right there, the blue line is. That covers those two recent highs right here in this. So I should have a line there for you as well, so you can see if you're a trader. Set a price alert. That should do the trick. But again, a breakout in this, if that level pops, that's 947. It's only going to go so far without cooperation with the other precious metals, with gold, silver, and the markets going down. Possible that it runs, but again, so those are levels to watch, and I'm expecting that it will. No guarantees, but if I have an opinion, I'm going to give you one, and when I don't, I'll tell you my opinions aren't strong. But I feel pretty good on these guys right now. What else was there? silver. Yeah, I already covered all those. So then back to palladium. So okay, so I just showed you the bullish setup. All those gold, silver, platinum, all falling to support after a decent correction, right? So number one, you have near-term oversold. They had a voracious bid a couple weeks back for months going into that. And so now you have palladium that's kind of doing its own thing here, PA. And by the way, I showed you PALL is the palladium ETF, platinum, PPLT, and I think most of you guys know silver and gold being GLD and SLV. If you don't, always drop me a line in the trading room or on the front page if you're not sure. All right, so back to this chart. What I like about it, well, number one, palladium's been rallying recently. Remember, gold, silver, everything else has just had a pretty decent, in fact, one of their strongest corrections in a month. Yet this one's running up to multi-month highs here. And see, palladium has a problem when it gets to that 1600-ish area right here. At 1600, almost to the button right there, a little shy there. Especially when it runs up to that 1600 level. You can't see it to the left of the chart, but there was some divergence on this high. You can see my line here, negative divergence on this high. So you have security that's extended, pretty overbought with negative divergence. And the track record on this one when it gets there, you know me, I like to swing these divergent highs and lows. It was bullish back here, divergent low, and that led to that rally. Divergent high led to that correction. And so target wise, again, you can look at it two ways: a pure play short, with a stop somewhat above. If it breaks out and burns through these divergences, you pick your stop depending on your price target. Or you can wait, you can short it here at resistance, expecting a breakdown, or you can wait for this wedge. That little 60-minute wedge, there's your uptrend line. Wait for that to break. If you want to zoom in really tight, you might be able to draw maybe a more aggressive, tighter trend line. No, I'm not going to force it. I like this trend line. We'll leave that there. So that would be it. So breakdown there. Targets should give you, there's certainly a little support right here, about this level, give or take, ranging from here, maybe down to those reaction lows. And my preferred target, if that wedge breaks, is going to be the trend line, which should come in right around that 15-15 support I just gave you on these reaction lows. So that would be PA, again, either a pure play short or PALL if you want to use the ETF. Again, short it up here at resistance, gives you a little more favorable price, but the higher probability entry is a break below the trend line. And then again, you can see the targets and either cover there, or if you think there's going to be more downside, you can, sometimes what I'll like to do is just set tighten stops to protect profits. And that way I maybe give back a little, whereas if I would have covered on the trend line. But sometimes you just break the support and you keep on going. That's the old, the old trading rule, investing rule is cut your losers, let your winners run. But again, I'm more of a tactical in and out trader, and that's, like I said, I would expect a reaction on the initial tag of that trend line. So therefore, if I do short this one, I haven't done it yet, I'll most likely be covering there. Yeah, I was going to talk about a few more things, some of the stocks I'm watching QQQ, like the ones I mentioned yesterday, but I'll cover those in the closing wrap video. But just wanted to point out that those that I saw the most, the pretty clear bearish developments yesterday: Microsoft, Intuit, INTU. What else did I mention yesterday? Is breaking down Costco. These are all top components of QQQ, and I'm noticing additional weakness on those stocks today. Here, when I brought it up, I'll mention it. So there's Microsoft. It didn't get this really a stick save yesterday, and we have a red candle day. It's not down much, but it's also, remember, the Qs are up about 1% today. So it's safe to say if the Qs were under selling pressure, let's say down 1% or more, Microsoft would be down even more. So the fact that Microsoft's not rallying on a day that almost everything else is, again, what takeaway, and I said this to somebody in the trading room. There was somebody that yesterday mentioned about positive breath in the market recently. What I've seen is a lower quality stuff. A lot of the oil and gas, E&P stocks, they've been rallying hard. Those have horrible fundamentals. Most of those are service sector stocks. In the energy sector, that is. So a lot of what was rallying is lower grade stuff. Not everything. And again, I'm only seeing a few, not enough. It's not all. A few of these market leaders like Microsoft showing weakness lately. A few days does not make a trend, but it is something worth monitoring. I mentioned Microsoft. I don't think it was Comcast. Costco, I believe I mentioned yesterday. Costco put in a bearish engulfing candle on that was Monday. Follow through. When I see a bearish engulfing, I want to see a red candle the next day, and ideally, close down below there, which we did, and again today. So that's confirmation of that being a possible, topping stick there. Still has to break this trend line. That's why, it's not an official short trade, but you mentioned that you can, anytime you get a bearish engulfing, the strategy I like to do is you can short it that day with a stop above the top of that bearish engulfing candle, because if you get a rise above it, especially well above it, then it negates the whole thing. So you set a stop there, and at this point you could probably raise it to wherever you're at, entry, bottom of the candle, and then your next sell signal would come on a break of the trend line, especially an impulsive break and close. So again, just a few that I wanted to mention that are kind of like this one as well, ADP, moving lower, and it's not yet a trend and it's only a handful of stocks, but usually when you see a lot of these market leaders breaking down, not just underperforming, that's the thing. I differentiate between just these stocks being down on a day that QQQ is up, because that's randomness. Any given day, a stock will be down when the index is up. The fact that they are down, following through these clear technical breakdowns. This on a scale of 1 to 10 is close to a 10. You have a rising wedge, big negative divergence that's been building for a while. You had a big bearish engulfing candle right there, engulfed the previous two, actually 3 candles. Then a follow-up red candle yesterday, very impulsive, and a breakdown of that trend line. I mean, check, check, check. Check marks across the board. And these are some of the big leading stocks. I tried to do Visa. And again, so Visa hanging on by a thread here. It's at the BOD, benefit of the doubt trend line right now. So I'll wrap it up here. Continue to monitor these. And again, these 5 or so stocks I just mentioned are not enough. They're not big enough to take the entire market down. Even the almighty Microsoft, largest company, largest publicly traded stock in the world, top component of QQQ and SPY, by itself isn't going to take the indexes down. You're going to need others to follow suit, such as Apple. Somebody talked about maybe they wanted to short Apple. They only use puts. I said, look, it goes against conventional trading rules. It would be an aggressive entry. You do have a divergent high now. This marginal new high is a divergent high, but this is a very clear, well-watched breakout. I mean, if you even new to trading or technical analysis, and you learn to identify support and resistance levels, that 216.50 is a golden level for Apple. It was very good support here, broke, kicked back to it, failed, kicked back to it, failed on a intraday breakout. That was an earnings failure there, and now we're above it again. So what I said is, look, you can short it here, you get a better price. The odds of the probability of the trade working are much lower. You're taking a breakout. TA 101 says you buy a breakout, you don't short it. Sometimes I will short breakouts that I think will fail, but the safer bet is to wait for it to fail, and then you have a bear trap, or a bull trap. I'm sorry. Fail means a solid impulsive move and close back below 216.41. Let's just call it 216 to be safe. And then I mentioned this trend line yesterday. So these are things I'm watching. We don't have sell signal in Apple. In fact, if anything, we have a buy signal today. So therefore, it just kind of makes the near-term outlook a little bit obscured. And that also, if they're going to build on this gain for 1 or 2 days, even if it does fail later, it's going to extend these divergences, and it's probably going to do that in the market too, like I showed you before, and give us that those higher extend the divergences, so to speak. So we'll watch this. I'm watching Apple as well as just about every other, of the top 10 or 20 stocks in QQQ. I'm watching them all closely to look for deterioration or continued deterioration in the market leaders. That's what I'm looking for right now. I'm just seeing some early signs, not enough names so far, but I'll continue to monitor it. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.